Heya Cryptozens. Tonight's show. Kwon blames insider for Luna crash. Celsius to be out of funds by October. It's 10 p.m. Pacific time. The date is August 16th, 2022, and welcome back to the Crypto Overnighter. My name is Nikodemus, and I'll be your host. The cover model, mascot, and co-host for this podcast is Tex, and together we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. And keep in mind, nothing in this show should ever be considered financial advice. On May 6th, 2022, Luna was the fourth largest cryptocurrency. That would not last, because on the 7th of May, it started to fall apart. First, there was a transfer of funds during the night of the 7th. A good chunk of value left the Curve pool. Now, this caused an imbalance on the Luna side of the equation. This is not an uncommon occurrence. However, the results in this case were quite uncommon. Things went from bad to worse, culminating in what has to be one of the most infamous crypto crashes in history. So what was the difference? Kwon took an interview recently. Interviewer Zach Guzman sat with Kwon for 2 days, letting him tell his story. This interview covered those dark days in May when Luna cratered, dropping from the 80s down to less than $1 a piece. And to get his side of the story out, Kwon sat with Coinage to cover his side of things. Now, props to them for scoring this interview, although some are less congratulatory. We'll get back to that. It was in this interview with Coinage that Kwon said that he believes there must have been a mole. And then the final blow came, not from an outsider, but from an insider. In a period of 13 minutes of liquidity imbalance, 200 million UST were sold off. This trend continued on through the night and into the morning. At that point, UST was wobbling on its peg between 99 cents and $1. Now, speaking about that time, Kwon said, quote, "The sentiment on Twitter started to get worse. And then there started to be more people that were trading against the Curve pools. And it was at that point that he tweeted a line that's sure to come back to haunt him for the rest of his days. He tweeted, quote, Anon, you could listen to influencers about UST depegging for the 69th time, or you could remember that they're all poor now and go for a run instead. Now, given that a lot of people who listen to him are now poor, I'm sure he hasn't heard the last of that one. Okay, so why does he think that there's a mole, that an insider took them down? Timing. Kwon said that they were helpless. His executive team was literally in the air flying to Singapore. He says that the executive team was on their way to a quarterly meeting at the Terraform headquarters in Singapore. And that's the key, according to Kwon. He says that the timing of the fund transfer coinciding with the absence of key Terra execs is too suspect. Because this is while it was a scheduled official function, but the timing when it would happen was insider information. Now, Kwon said, quote, the only people that knew were TFL employees. So if you're asking me whether there was a mole at Terraform Labs, that's probably yes. Now, see, Anchor was one of those things that catapulted Terra to the fourth largest blockchain by market cap, 20%. You see, Anchor was promising 20% returns on investment. Banks are offering less than 1%. So it's easy to see both why this would be attractive and why it's ultimately unsustainable. But by then it was too late. The only thing holding Terra together was the inflow of cash into Anchor. Now, Kwon also looks at this as signs of an insider attack. He said, quote, when the anonymous traders stuck on May 7th, Anchor's runway was down to only 45 days before it would need another injection of cash. And because this was all playing out on a transparent blockchain, anyone could see the end of the road looming there on the horizon. It's interesting that he says that, because that happened in May. When a Terra community member proposed a $1 billion top-up in April, Kwon coyly replied, sounds low. Some folks believe that this level of arrogance is still on display, including the choice of media outlet to tell his story. Maybe the congratulations I offered earlier were undeserved. Regular Terra commenter Fatman said, quote, "Doe, why not have an interview with someone more neutral and respectable like Bloomberg or Fortune instead of someone who has been consistently shilling for you for years, almost as if he's paid?" Then he went on to call Guzman a sycophantic interviewer. Other viewers were also similarly less than impressed. YouTube user Isles Smith wrote, quote, "You didn't even ask the juicy questions. We pretty much already knew everything that was in the interview. What you should have asked him were his plans going forward. You had a good opportunity to finally interview him, and you blew it." Master Key Musica added, quote, "This is joke, not an interview. They tried to clean Do Kwon image. Is an insult to us." Now, Bitcoin fan Corey Klippstein has encouraged people who lost money to go after Do Kwon legally. Haley Lennon, however, believes that we should starve Do Kwon of attention. She wrote, "I'm not sharing a link because it doesn't deserve clicks." Now, where this goes from here is hard to say. South Korea's prosecutors have put a limit on the mobility of Terraform Labs employees. However, Kwon is in Singapore, so he escaped that threat. That is, unless South Korea decides to void his passport, that could force him to go back. And what would he be facing? Nothing good. Last month, South Korean officials have been taking steps against those linked to the Terra collapse. Prosecutors have hit 15 different entities, including Upbit, BitThumb, and Coin1. These were all in response to the scores of legal complaints their government has received over the incident. At the time of writing, the global crypto market cap is $1.14 trillion. It's down slightly, 0.74% in 24. The top 5 cryptos by market cap are Bitcoin down 0.42%, Ethereum down 0.26%, Tether, USDC, and Binance Coin down 0.85%. Now, global NFT sales volume is down 0.75% in 24 hours. According to CoinMarketCap, the top 5 NFT collections by sales volume are Bored Apes, followed by Other Deed, Mutant Apes, Doodles, and Women Ape Yacht Club. Now keep in mind, some of these collections have very volatile prices, so do your own research. It is no great newsflash that Celsius is running low on funds. They are in Chapter 11 bankruptcy. According to their latest filing, they're running on fumes. They're expected to achieve negative liquidity by October this year. So on Sunday, paperwork is filed at the United States Bankruptcy Court at Southern District of New York. And that paperwork said that by October this year, Celsius is expected to go into debt to the tune of $34 million. Now, back in July, things weren't looking quite so bleak, were they? No, they painted a very different picture than the one that's emerging this week. They had grand plans of standing up a bunch of miners and then mining their way out of debt. Remember now, Celsius doesn't have any cash coming in. Expenses do pile up. And right now, it's looking like Celsius is looking at a drop in liquidity of something like 80% over the next month and a half. Over the next 3 months, that's $137 million going out, nothing coming back in. Now, this is despite the fact that they claim Celsius, quote, operates one of the largest mining enterprises in the United States. Before the crunch, they had plans to, quote, mine Bitcoin by acquiring and making operational additional mining rigs. This is a month after Reuters reported that the U.S. bankruptcy judge Martin Glenn gave the go-ahead to Celsius to stand up a new Bitcoin mining facility. That could cost up to $3.7 million. On top of that, it could cost another $1.5 million just to cover, quote, customs and duties on imported Bitcoin mining rigs. And it seems that Celsius thinks that mining is their way out of this mess. Right now, they're mining approximately 14.2 Bitcoin per day. They have over 80,000 rigs, 43,000 of which are in operation. So Celsius is saying that this is promising, that they'll mine more each year. Right now, they're sitting at 3,114 Bitcoin were mined last year. They were expecting almost 3 times that amount this year and a rise to 15,000 Bitcoin per year in 2023. Now, they're just mining and hodling. They're not selling any of it yet. In the meantime, Celsius has not put out a monthly statement in a while. The last one was in July, and I'm not sure that we can take it at face value. That was when they announced their, quote, strong and experienced team had voluntarily filed for a Chapter 11. And so they're sitting on a balance gap of $2.85 billion, which seems like a lot because it is. But how did we get here? Now, some would say that part of the problem was CEO Alex Mashinsky, because he reportedly took control of trading at the firm. Now, this was in January, and he was worried. Remember, this is January, and inflation was starting to become more obvious and that it would not be transitory. So Mashinsky was worried about the Federal Reserve, that they were going to hike the interest rates. At the time, Jerome Powell was talking about high inflation and strong jobs market, and that those were indicators that rates need to be increased. Well, that concern greatly affected his thesis, which is unfortunate because while reports suggested that the Feds were going to implement rate hikes in January, it didn't actually do so until March, arguably after the damage had already been done. Because according to a report from the Financial Times, he personally directed individual trades. He overruled the experts in their field because he was sure that that's what he needed to do to protect Celsius. At one point, Mashinsky ordered the sale of, quote, hundreds of millions of dollars worth of Bitcoin. Less than 24 hours later, Celsius bought that Bitcoin back at a loss. Mashinsky's actions and convictions brought him into conflict with his own chief investment officer, Frank Van Etten. It's reported that they fought regularly over trading strategy. Van Etten didn't last long. He joined Celsius in September of 21 and was out by February of this year. According to the Financial Times, a person familiar with the matter said that the Celsius CEO, quote, had a high conviction of how bad the market could move south, and he wanted staff to start cutting risk any way possible before the Fed meeting. And so, while the meeting did happen, and rate hikes were announced in March, crypto didn't fall for another 2 months. One person reportedly said Mashinsky was, quote, slugging around huge chunks of Bitcoin and ordering trades based off of bad info. Another sign of questionable judgment was the Grayscale Bitcoin Trust deal. Falling prices of Grayscale's Bitcoin was one of the things dragging Celsius's value down. Now, last September, they were hodling 11 million shares worth roughly $400 million. They just sold that last April for a $125 million loss. That's because since February of last year, shares in the trust have been trading at a discount. So we do know that Celsius incurred roughly $50 million in losses just last January. Now, we don't know for sure that this was due to Mashinsky's trading and failing miserably at it. That said, what I've heard, based on that, I wouldn't put Alex in charge of my portfolio. And I think that's going to do it for us this evening. I want to thank you for listening, spending your time with me, because when you stop listening, I will stop talking. Take care of yourselves, but take care of each other too. We'll see you tomorrow night.